Hello, and thank you for watching the short subject, Modern Security in Financial Services. This is a continuation of the other videos we've done around security intelligence and analytics and protecting your data and cognitive systems. But this one not only targets the financial services sector, it also talks about how to solve the problem. But before we get into that, I think it's important to do a quick lesson in grammar. You've probably heard of antonyms and synonyms before, but now we're going to talk about contronyms. And a contronym is a word that has two meanings that actually contradict one another. So let's take a look at a few examples. So you can have things like scan or oversight or transparent, and all of these are contronyms. A scan, for example, could mean a quick glance at something, but it could also mean a detailed analysis or investigation of an object. Transparent could be the ability to be completely oblivious to something or completely open and honest and direct about something. And oversight could mean completely controlling, or it could mean the ability to totally overlook something. Now, all of these contronyms have specific relevance to security, but these aren't the three I want to focus on. The three I want to talk about right now are governance, risk, and compliance. Now, why are these contronyms? Well, they can mean a set of controls and frameworks to help a business analyze, identify, and close gaps that may lead to negative brand or client impact. But they can also mean confines that dictate how a business must operate and provide a guide for bad actors to identify the best chances to steal high-value data. The more you prescribe a method to something and enforce that method, the more opportunity you're giving other people to use other means to find a way in. And that becomes the problem. And the reason why this is such a problem in financial services is governance, risk, and compliance very often dictates the organization, the philosophy, and the spending profile of a security team. And so if you have your entire posture dictated around the concept of GRC, even if you define risk as business risk, you are still at a disadvantage compared to the people trying to get into your environment. Now, let's look at some examples of how all of this is manifesting out in the wild. These are all within the past 5 or 6 months of publication, but Fortune magazine did a cover story on red tape and how the wrong kind of regulation is strangling business. This is a great example of how GRC is a contronym because it's creating a situation where they are implementing so many different standards and so much detail in the framework and in the regulations that it's not only inhibiting innovation and growth, but you're also giving bad actors a very prescriptive method of getting in, because bad actors do not have to play by these rules. And no matter how mature and comprehensive and up-to-date the rule sets are, you're always going to have very creative people figuring out ways to get around them. Now, dovetailing into that, we also see from the Harvard Business Review in the issue that talks about what keeps CEOs awake at night, a short story on industrial espionage being more effective than R&D. And it goes on to talk about the fact that you've got a situation where it's actually more lucrative and allows companies to innovate faster if they hire a group of bad actors to steal other people's ideas and then use them for themselves or modify them slightly so they don't look like somebody else's idea and then build on those. And then finally, you've got a very, very dangerous topic, which is the weaponization of social media. The concept that you can organize and coordinate attack vectors amongst individuals or groups attacking a specific entity and either creating significant amounts of noise to the point where it's impossible to find signal, or so much chatter directed in such a very specific way that you divert all of your attention to that vector that seems to be indicated, and they figure out another way to get in. Now, there's a lot of very mature security postures out there that would detect a lot of these types of things. But one of the things that it always lacks is the ability to find motivation. And there are very, very smart people that spend all of their time trying to figure out the motivations, and sometimes they do. But the point of this is not the contrarian view that everything I'm saying can be countermanded or contradicted because somebody has figured a way to solve the problem I'm proposing, because I know that that's the case. It's about understanding that for the masses, these are very real problems. And the smaller the financial institution, sometimes the bigger the problem. And sometimes if you have a large one that operates internationally, it can create a whole different set of headaches. But the point is that in the modern threat landscape, with all the different capabilities that bad actors have available to them, GRC is nothing more than a giant pair of handcuffs if you let it be. If you run your entire organization and you base your philosophy and all of your security funding around the concepts of making sure that you can check a box for a framework, that you can keep your regulatory compliance on par, and that you understand all of your risks and you're ring fencing your critical assets, you may have exposure. So, what do I mean by that? Most security teams focus very heavily on protecting their data, their applications, their people, and gaining visibility to the entire network, and that's important. But what's even more important in financial services is understanding what drives the business. And what drives the business is currency, money. Now, more often than not at this point, I would venture to say it's probably over 80%, although I don't have the numbers in front of me, business is conducted electronically now, through apps, through web pages, through wire transfers, through SWIFT, so on and so forth. But it all starts the same way. Somebody earns money, whether it's a business or an individual, and the earner has a digital identity. And they use that identity to authenticate themselves to get into applications that store information about the money that they are entitled to. The precious metals, the currency that they have earmarked for themselves, that should they ever want to walk into a branch and turn it into something real, that they can do so. But because it's electronic, you also have bad actors with various types of toolkits that are looking to break into those sensitive databases and steal that money, turn it into real currency or metals, and then do what they will with it. So it always starts and ends with money. And as long as we keep that focus, it allows us to change how we view our security posture and how we need to protect our businesses. So let's also look at some of the more current threats that are happening that are directly impacting the financial services sector. So the first ones we're going to talk about are the brand new Stuxnet style of malware that has been slowly invading not just banks, but government systems and many others. But it has targeted the financial services sector quite heavily. And it has become somewhat invisible to people that are trying to stop it. It has developed itself in a way that it can manifest, reproduce, hide itself, and go largely undetected even by some of the most advanced malware systems. Then you have the external threat, right? So aside from having your own systems infected, you also have the challenge of things like the big Cloudflare data leak, where a bug caused code to be dumped onto public web pages, revealing everything from encryption keys down to personal credentials. So if there's any users that use one of that myriad websites that Cloudflare hosts, and those credentials were stolen, and they happen to be using those same credentials to log into their banks, you can better believe that there's going to be online fraud being committed almost instantaneously, even out of sheer luck. Like, hey, we'll go to bigbank.com and just try some of these credentials and see if we can get in. So you've got this double exposure. Now you also have the challenge of the fact that we still know, and you've seen these reports over and over again over the years, so I don't think this is anything earth-shattering, but most companies that suffer a data breach still don't know how it happened or potentially even why. And that creates a whole nother challenge in and of itself. And then finally, in the financial services sector, especially for banks that do business in Europe, you have PSD2. And I fully expect to see this standard get rolled out across the world. And PSD2 basically says banks are no longer allowed to hold a monopoly on how electronic transactions are conducted. They have to create an API system, an open banking environment almost, that allows anybody to be a transaction broker. So now, aside from just having people with their digital identities logging into a bank and doing business, you've got people that can log into third parties that can then do an authenticated or secure transaction back to a bank via API call. And you've got additional pieces in the mix. More complications, more data, more places for potential fraud, more issues or more challenges with buggy code. It creates a great open environment with fewer monopolies, but from a security standpoint, it can be an absolute nightmare to track and maintain. So what needs to be done to address all of this is we really need to start thinking outside the box a little bit more. And if we keep in mind how the money flows, and we keep in mind the fact that while GRC is essential in financial services, it doesn't have to be the be-all, end-all, nor does it have to dictate every decision made from a security standpoint in the banking environment. We can accelerate and innovate. And there's a few things that we can do about this. So I think the most obvious one is the concept of a fusion center. A lot of institutions are already implementing these. And it's the ability to bring multiple departments and multiple disciplines together in one room under one roof that allows more rapid collaboration. But fraud is still largely separated from that. And there's a number of reasons for personal protection and information sharing, as well as obviously the sensitivity of the identification of fraud being committed. A lot of people turn to cognitive and machine learning systems, but there's a lot of different ways you can implement those, and they're not always the most effective for trying to find truly advanced threats. A lot of people are applying cognitive and machine learning to data you've already collected to try and find more advanced patterns. Well, the problem is that if you're using it purely to look for data you've already harvested, that means that whatever you find has already happened. And the best way to identify challenges is to be looking outside of your environment, not in it. You also have to really focus on and develop a mature posture around identity management, digital personas, insider threat, and understanding all of the different motivations and schemes that can be employed and how people will manifest potentially negative sentiment and what they may do if they're pushed over the edge, and how they may react and who they may consider cohorts, and what actions they may take afterwards, and who the beneficiaries of any theft or fraud is. And that brings us to the last piece, which is fraud itself. And whether it is insurance fraud or online fraud or wire fraud or any combination of them. Oftentimes, like I mentioned, we see fraud as a completely separate entity within the financial services sector, and it cannot be anymore. Now, there may be certain things that still need to be sacrosanct within the fraud team, and that's fine. But fraud is not an isolated event. It is always a symptom. And it is either a symptom of phishing or identity theft or insider or malware or all of the above. But unless you can definitively and rapidly correlate the activity that the fraud department is seeing with telemetry being gathered from the security department, I would almost guarantee that most investigations are missing something. And you have to bridge that gap. Again, bad actors are not bound by rules. They don't care if certain PII can't be shared with another department. As a matter of fact, they're betting on it. Because if they commit fraud in one place and that fraud team can't or won't share the telemetry or the critical indicators that they are seeing with the rest of the security and the rest of the analytics teams because of a regulation, then it means that they can commit more and more and more fraud with different accounts without ever being detected, or without being detected for a very long time. So how do we start to resolve this? Well, ultimately the goal is to prevent what you're seeing happen here on the screen, the ability to do money laundering, fraud, theft. And one of the first things that comes to mind is blockchain. Now, blockchain is not a directly security involved capability set, but what it is the ability to chronicle and journal in great detail all of the chain of custody of a transaction from start to finish. And it has the ability to do that even across multiple agencies and entities and companies. Now, especially when you look at what was going on with PSD2, like I talked about earlier, that becomes an absolutely invaluable set of data to be used by a security organization, especially if they get pre-warning of an imminent threat or a new attack vector, because they can use that data to help find patterns and help restrict and block access, as well as for investigation after the fact. Now, dovetailing into that is the ability to look for fraud. And a lot of times online fraud is the result of malware or phishing or bad code. And we can detect and prevent all three of these, or even if we can't prevent, we can detect and report so that remediative actions can be taken. Now, another piece of this that is not related to online is the ability to implement video analytics in branches and in stores and at ATMs. Are we seeing the same person that appears to be in different disguises showing up to a significant number of branches within the same geographic territory within the period of an hour and a half, and constantly withdrawing small amounts? Are we seeing people in a bank that should never be handling money? Are we seeing packages being left? Are we seeing facial expressions being used? Are we seeing people of different ethnicities and what their identity should imply or does imply? Now, I know all of this seems a little bit scary, but the goal here is to protect the financial services sector and protect the client's money. And so this data can be absolutely essential in identifying perpetrators and fraud in progress. Now, you've got a ton of information there, but you're also collecting all the traditional security analytics, so all the data processing logs and network logs and everything else. All of this, the blockchain journals, the fraud information, the video analytics, all of this has to be reported back to a central operations center, whether we want to call that a fusion center or something else. You must have end-to-end visibility, and you must gather all of the data that you can possibly gather, because you just don't know what the next vector is going to be. You don't know what the intent is. You don't know who the perpetrators are. You just know that it's going to happen. And then finally, if you detect something in progress, even if you have the ability to stop it, stopping it is not enough. If somebody throws a ball at you, if you're playing dodgeball, and you manage to deflect it, you've just given that ball back to somebody who wants to throw it at you again. The objective is to catch it, not rebound it. And so you have to have a system that can look at all of the telemetry and feeds from special organizations that are looking at dark web activity and the ability to correlate that with geospatial information and video information and telephone records and address data and every other piece of data you can think of, and build comprehensive relationship and alias and entity mappings to understand who interacts with whom, what they may be doing, where they're doing it, what phone numbers or other information they're using to collaborate with one another, and be able to report all of that back in a way that law enforcement would find enforceable. That is a comprehensive security posture. This is not about whether you should have an IPS or just an IDS, or whether you should have one vulnerability scanner or another, or whether you should have a dedicated asset manager. This is about looking for and sealing every possible gap. And there's nothing in here that directly contradicts a mandate of making sure that you can uphold your company's GRC. But many of these capabilities go beyond or outside of the scope of the bare minimum GRC requirements for most organizations. And this is where we need to start getting to. Now, the way we can do this, if we think about it, is start with the transactions. I talked about how everything starts and ends with currency. Everything starts and ends with money, and that's absolutely true. And in a transaction, there's really three things that happen. You've got the customer themselves, the devices they use, the assets they hold, the identity that they own. All of these things are stored in the data stores of the financial organization. And it's accessed via portal and apps or external entities. It is applied to actuarial functions that determine interest rates, different products and offerings to be delivered to the customer, and how the money that they're storing is being handled. And then it's warehoused along with countless other clients' money or electronic signatures that represent money. But then you also have all of the operations of the bank itself, and this is all of the traditional monitoring that I'm not going to get into, but all of the things that you would expect to have in a traditional GRC framework. And only if you organize your thought and potentially your teams around these three areas, the customer and what they own and what they know, the data and the path it takes, and the operations of the organization as a whole, and understand how these three things interact with one another and operate together, will you have the opportunity to get in front of and effectively help to defend against the most modern threats on a revolving basis. It's not about what the most modern threats are right now, because in a month from now they're going to be different. It's about getting enough visibility into these three areas that if you need to take action, if you need to initiate an investigation, regardless of what the inception of it is, you have the ability to do so. And that is what a mature and modern financial services security posture should be about. Thank you.